Okay, today I wanted to talk about NVIDIA and to highlight how it was on an upward trajectory during the week. And some point during the week, it hit a high and decided to change direction. So, what I'd like to do is walk you through some of the steps that could have allowed you to capitalize on the upward moves, but could have also been signaled to get out. When it stopped moving up and there were sell signals, how you could have seen those sell signals to exit the trade. So let's go ahead and jump right in. So here we're looking at NVIDIA on a daily. Here's a 5-minute chart. So uh, on this day, which was Tuesday, you see it showed continuation. So Monday, and this is Friday. So Friday, it made a move up, stopped here, and could not break this level. Monday opened up and traded well above that level. We could take a look at the 5-minute chart here for Monday. So you see Monday, it was a bit choppy, but then it made a move here around 820 and then continued higher. So ended up closing above prior resistance here of 526. And the next day showed strong continuation. So this was actually on 9-1. So let's go over here. So here we're looking at Tuesday, which was 9-1. So opened up kind of flat in another inside day on the 5-minute candle, and then made a move up. So let's take a look at the larger scale chart. Okay, so here we can see this was 9-1 on Tuesday. Again, here opened up kind of flat, nothing going on. Second candle, pretty much an inside candle. And then the third candle broke this level here of 541 with a very strong move up, and we can see the follow through here on the volume. So you could have actually gotten in here at 5 once it took out this high right here. That's where you could have actually gotten in if you were going to capitalize on this move. So we're looking at 542. You could have got in and stayed in as long as it rode this 3 EMA. So you could have got it at 555. Say you got it at 554. So you're still looking at a $10 and $12 move, depending on where you got out. So it would have been a pretty good move up in the morning to capitalize that gain. And let's take a look at what happened later on in the day. It looks like it just chopped around on this day, which was Wednesday, the 2nd. It gapped up, showing a lot of strength here. Hit a high of 589, but then the telling signal here that would have allowed you to take advantage of a downward move or to get out would have been the fact that it could not break this high. It stopped here, and the next candle, which was 5 minutes, actually opened and closed below. So as soon as it broke this level, that's your signal to either get short or to get out. And because that's the signal showing that it's not going to continue higher, and you might as well get out of the position and wait for a better setup. So this is a good example of a stock that was trending higher for the prior 2 to 3 days, showed a lot of momentum, was directionally heading up, and then on the third day, we saw that it tried to make an attempt even higher, which it did. It gapped up significantly here, but it could not push through. And if a stock cannot push through in the first 5 minutes after it gaps up, chances are it's not going to continue higher. It may chop around, it may test, some of these lower levels here, but that's a signal, and that's an opportunity for you to get out and wait for a better setup. There's no reason for you, if you were long, to get in here. And let's say you held the stock overnight, so you capitalize on all of these gains here, make a high. You might as well just protect your profits, exit the trade, or set your stop loss to this level. If it breaks this level, 576, then you get out. So you're guaranteed if you held the stock overnight, at least you would have held on to these gains here. It gapped up from 554 all the way to 575, a significant move up in the morning as soon as the market opened, and would have been a great opportunity to take profits, if it didn't continue higher, or if you had multiple contracts to exit some of your positions and let some of your runners run, and put a stop loss under this candle. Or you could have put it higher, if you put the stop loss somewhere around here, that means as soon as it hit this level, you would have been exited out of the trade and guaranteed to keep even more of your gains. And let's take a look at this level here. This was generated at the opening of the market at 576. So gapped up, pushed up higher to 589, pulled back. You see the second candle attempted to break 576, could not. Third candle, fourth candle. And by this point, it was either going to just chop around or it was going to test lower, and that's what happened. This candle pulled back. Then you had another candle pull back here below the 8 EMA, and it did try again to break this level you see here. But again, here it shows you that it could not break this 576 level, and then just basically chopped around for the rest of the day. See, you can see it never really made it tried it again here around 10 o'clock in the morning, couldn't make it, tried again here, and then closed below this key level, 576. So then the following day, I would be looking, this is a key level, to see, would it break this level? Would it try and test it again? And if it continues to trade under this level, then that's an opportunity to just maybe go short. So what did it do? The next day, on Thursday, it gapped down significantly. So closed around here, 571 level, actually 572, and gapped down all the way to 555 level. A significant move down, and you see it never really recovered. So let's see, how can you have gotten in on this trade? Okay, gaps down here, you were not in the trade, so you want to know, how do I know if it's going to go up or down, so I can try and get in on the action, on what's happening. So what you do is you look, this is the 8 EMA and the 3 EMA. So as long as it's trading here under the 8 EMA, you can stay in the trade. So let's see what it does. Okay, 5-minute candle here, gaps down, inside day, goes a little lower, trades sideways, tries to test the 8 EMA, and could not. What you see here is getting rejected. You got two dojis here. That the next candle is red. You can write it down or wait for it to break this level. This was 542, another key level. So started trading around this level, and I would have got in here at 538 and just wrote it down. Stayed in until about 525, and actually went down to 521. So it was quite a move here. Tried to test the 8 EMA again, pulled back, went above, but then you see it just kind of traded below that range. And then the following day on Friday, flushed again, tried to do something and then flushed and then went even lower. So the key to a trade when you're going short is to see how price reacts to key levels, and also see how price reacts to these key moving averages, and those will keep you in the trade or keep you out of the trade. And just wanted to spend some time to highlight that, because NVIDIA was a good example of a stock that was moving up and then it changed direction midweek. And you need to be cognizant of both sides. Price action will give you signals, and if you take advantage of those signals and interpret them accordingly, then you're going to make some money. So in this case, if you would have seen the signals, realized and recognized that price was not going to continue higher, was going to go down, then you could have made some profits to the downside as well. So that's all I got for today, and we'll be in touch soon. Thanks.